welcome again, everyone. This is Jerry DuPaw with the Achieving the American Dream podcast, and today I'm joined by a special guest, Victoria Suthers with Keller Success Realty. Victoria and I work a lot together in this market, helping buyers and sellers throughout the process and journey of home ownership, and we were kind of just going to go over with you guys what to expect if you were to work with us, basically. How the process works, what happens after you reach out, a whole bunch of stuff here. So Victoria, thank you for joining me. I really appreciate you doing this.
Of course, thank you for having me.
Yeah, we're really excited to share some things with you here. So basically, when you're in the process of looking for a home, hopefully you'll reach out to one of us, doesn't matter who, right?
Right.
Because we work in tandem. So, but what you would basically expect first, I would think, Victoria, what would you say to a buyer that first calls you as far as, you're going to obviously want them to be pre-approved, right? And then you're going to go through the different types of homes that they want. But I don't know exactly what happens when they call you. So just kind of share with everyone how that works.
So the first thing that's most important when purchasing a home, in my regard, is for a buyer to know their buying power. So key to the home buying process, just for the fact that, they're looking at homes and they think they might be able to afford something that is out of their budget, or they don't know what their budget might look like.
Yeah.
There's many things that go into a mortgage payment, such as taxes, homeowners insurance.
HOAs, maybe. Yep.
Right.
Yep.
PMI.
Yep, absolutely.
Principal, mortgage, interest.
Yep. And then there's,
the MI.
Yep, there's just so much that could affect your payment and what you could qualify for. There's some changes coming in the mortgage industry, we hear, that may help with qualifications as far as
Credit scores.
Credit scores are being reduced as far as the minimums, which is one. And then they're talking about extending a term to a 50-year mortgage to help, more people maybe qualified. I don't know exactly how I feel about that one,
right.
But it still is better than renting.
Yes, way better than renting.
Maybe you're not paying down your mortgage as fast, but you're still gaining the appreciation, right?
Correct.
So you're not going backwards, at least. Renting, you're going backwards.
I agree.
Right?
I agree.
So
pay the landlord's mortgage.
Right. So as far as that, then you introduced them to me, obviously, and then what I have them do initially is, I have them apply. And with us, it's only a soft credit pull, so people don't have to be concerned about their credit score going down, just to figure out what they can afford and what their mortgage options are, which is really nice. There's a lot of lenders out there that are going to pull your credit right away. And if you start calling multiple lenders, you don't want your credit pulled over and over and over, because that hard credit inquiry start to cause your score to go down. So it's very important to start off right.
The people that are watching us might not understand what a hard credit pull and a soft credit pull means.
Yep, exactly. Well, there's a big difference. A soft credit pull for us, we're going to be able to get all the data that's needed to analyze you as far as putting you through our automated underwriting systems to make sure you would get an approval for either a conventional FHA or VA loan. It's going to give us your 3 credit scores and all your trade lines as far as car loans, credit cards, personal loans, anything you have out there that you make monthly payments to. We're going to be able to see that, what you owe and what your payment is. Because that all gets factored into what's called the debt to income ratio, which is one of the factors we look at when we're approving a loan, right? There's credit score is another, assets is another, job history is another, payment history on your things, on your credit. But a soft credit pull means that it's not going to affect your credit score, because when there's a hard credit pull, it's the same thing. We get the same data, but that hard credit pull actually will affect your credit score in a negative way. And the reason it does that is because, if someone's out there shopping for a bunch of credit cards and personal loans, that obviously means
a car. Is a car a hard credit pull?
Usually, yeah, almost always.
Yeah.
So it depends on what dealership you go to, because that finance person at that dealership might be working with 5 different banks.
And they send it through.
And they send them to all these different banks, and every one of those banks pull their credit. So you could see someone's score go down like 40 points just for buying a car.
Right.
Unless you do it the right way.
Ugh.
I mean,
You tell them specifically,
You're right.
do not run my credit.
Exactly. And the same thing could happen if you keep calling different mortgage places. I mean, I'm here to help you find the best product and program rates, the largest lender in the purchase lender in the country. That's our job, to find out the best product and program for you. And we're very transparent with it, with the whole process. As you know, we give detailed loan summaries on every single property. Before you even go to look at it, that person's going to know, if they make an offer, what that payment's going to be, exactly line by line, what they'll need on the day of closing, all those things. There's not a lot of lenders that necessarily do that.
I agree with that.
Yeah.
So the difference between the card and soft credit pool we've established. Now what happens next?
Right.
So you explain that to them.
Yep.
And then you tell them where to go.
Right. So we talk about when they call me, as far as the process here, and they would apply, and we would do that soft credit pull. And then what they can expect is I would send them a link to our rate app. Our rate app is absolutely incredible. I'm going to do a little recording of it here so you all can see. But you would just go to the Play Store. You could type in rate, or I'll send you the link for the rate app. But you can see if I could spell rate, there we go. Comes up first, it looks like this. I already have it installed, so I'm going to open it. And you can see here, there's a whole plethora of stuff having to do with buying a house and tools in here for you to be able to explore. There's also all kinds of financial videos, and there's all kinds of educational things when going through to buying a house, refinancing, all that kind of stuff. There's ways to look up at current rates at this current time. Like you could just go into the tools and go into the calculators, and you can click on current rates, and you type in a scenario. Say it's a $300,000 house with $75,000 down. Well, let's change that, because no one has $75,000 usually. We'll put like $15,000 down. We'll do like a 5% down payment. There we go. And we'll make it Crystal Lake instead of California. How about that? And we'll do one with no points. You can change this all here, and you can hit check my rates, and that's going to tell you as of right now what the current rate is for each program that's available.
Wow.
So no points today on a 30-year fix, 6.075 on a conventional loan, FHA 5.575, and that's a 5% down, $300,000 house. That's great.
That's great.
It's way better than we've been seeing in the last couple of years, right?
Yeah, that's as of today.
Right, as of
November 13th?
Yeah, that is the date. Yep.
We are.
So that's where we're at currently, and we hope to see more improvement as we go along into next year, right?
So when they do this, what do they need to have with them? Like they're sitting down, they got their laptop or their phone. Right. What do they have to have with them? Do they need to have some paperwork with them? Do they have access to their accounts?
Sure. I would have the username and passwords to some things, like your payroll system and maybe your bank accounts, right? Make sure you have that handy. A lot of the stuff that we do here at Rate is done electronically. So sometimes we don't even need anything documentation-wise from the borrower. It's pretty amazing the way it works. But what they would do is they would go on the main screen. Once they create their account, they have to create an account first. They get a code through email, a code through text. Look at your spam if you don't see the code for the email. Sometimes it's there. But once you're in and you create an account, then you can log in with your face or your fingerprint. And the first step, they would hit the first tile here that says pre-approval. So we would hit pre-approval, and then it's going to ask you, are you working with someone from Rate? Hopefully you'll say yes, and hopefully you'll pick me. So I'm in the 60014 zip code, Jerry DuPaw in Crystal Lake. So you pick your loan officer, and then it's going to say get pre-approved.
It just gives them an idea of what they have to do. And I don't know if we have to walk them through all the steps, but
right.
Just so that they know. Many times it can feel overwhelming. Oh my gosh, I'm going to make an application for a mortgage company to get a mortgage. What do I, and I come from being in the business since 1985. So,
right.
I mean, we used to have all this bank statements and all these things. So with technology today, to be able to just do all of this from your phone and then just sign in and connect your apps to Rate to be able to apply, it's literally, they could apply within 10 minutes and have something back in 48 hours or is it 24 hours or 5 hours, 2 hours?
It's literally almost instantly after they're done. So because when they give the authorization to verify their income and their assets electronically, it literally is done instantly. And then there's AI underwriting that happens instantly. So their pre-approval letter could be issued within a couple hours, because I have to review it. A human has to review to make sure
good.
everything was done correctly. We're not just going to issue a pre-approval letter based on, an AI decision. We need a human to really verify that all that was correct. So as soon as I'm able to review it, I then call up the client and we go through it all. We want to make sure some things were done correctly. If I have any questions about anything, but as long as that all looks great, we're going to issue that pre-approval letter right then and there.
Okay.
Along with the pre-approval letter will be a detailed loan summary on an example. I usually try to do, your max of what your max would be. A lot of people don't want to go to their max, but it's just good to know. Good to know what you could buy, and then we would do one based on what they want for a monthly payment, what their goal is for a monthly payment. That's usually what I try to ask people. Have you budgeted? Have you figured out what you can afford per month? Like, what are you paying in rent? How much more can you afford to buy a house, type of thing? And then we do a loan summary and a pre-approval letter based on that. And those are the guidelines we give over to you for you to start your amazingly hard job, I think. It is really tough what Victoria does, and a lot of people, don't know how hard it is to be a realtor. It truly is. She'll drive anywhere. I mean, within reason,
an hour radius,
reason,
right?
But we have some first-time home buyers,
and the loan summary for them, it really helps them understand where all the dollars go.
Right.
Because if somebody who's not paying attention to where their money goes, they show up at the closing table and then they're like, what? Where are these fees? Like, why am I bringing so much money? Or even a couple of days before closing, they're just shocked if they're not completely from the beginning transparent.
Right.
And it's super important for me that anybody I work with is transparent with my clients. And that's how I strategize with my clients. We're very transparent, working together and letting them know, this is going to be your appraisal fee, so that kind of leads into, the strategy session that I tailor for my clients. Not every strategy session is the same. So after I receive, after you send me the pre-approval and the loan summary, I meet with my clients, and whether you've bought or sold in the past, it doesn't matter. Things have changed. Even from last year, things have changed. So I always meet with them and we go through your loan summary, and we talk about the strategies that we need for when we're going to write an offer. And I explain the expenses that are out of pocket. There are so many times they don't realize that there's going to be out of pocket expenses. Right. And then sometimes they think the attorney is an out of pocket expense when it's not. It's part of the closing costs.
So, Victoria, when you set people up on a search, it's different nowadays because we have more tools, right?
Right.
So, and one of the really cool tools that you shared with me is
Zenlist. It's such a great tool. It's actually an app. So my clients will get invited to Zenlist by me, and they will download the app and they accept the invitation, and they'll be immediately able to search the MLS. So covering the northwest suburbs, thousands and thousands of homes. But one of the key parts of that is through Zenlist, you have access to the private listing network. And those are the coming soon properties. I like to describe it as like the movie trailer. If I'm listing a home, I'm 90% of the time putting it on the private listing network. It creates that movie trailer for the property. It gets people excited about the property. It allows us to see what's going to be coming on the market soon. And my clients like that inside track. And they know about it immediately. With third-party companies, Zillow, Realtor.com, I don't know if Trulia is still a thing, Redfin, they don't have access to the private listing network listings. Right. The PLN, as I call it.
Right.
So,
and what is that? I mean, people don't necessarily
It's a coming soon.
know that.
Yeah, so it's all those listings that are coming soon. If an agent decides to market that listing that way.
How does the coming soon happen? Like when the listing agent takes a listing.
Right. Yeah. Great question. Because if I'm meeting with you, I'm having a conversation of what you want to do to the home to get it ready. Many times the home does need things that need to happen to the home before it can go on the market, before it's show ready.
Right.
You know, whether it's staging, painting, updates, cleaning, moving things out, moving things in, etc. So while we're getting the home ready, so again, that movie trailer in my opinion, we're getting the home ready. Why not start pre-marketing the property, letting buyers know this home is coming soon? Especially, let's say that buyer wants to be in a specific subdivision,
right?
And now they know that home is coming soon into that subdivision.
And that could take a couple, maybe weeks for a seller to do, right?
Yeah, and some sellers will put things on the market on the PLN for weeks.
So have you seen homes that have gotten sold that never showed up on Zillow or Redfin ever because of this? So to have access to this is pretty huge.
Yeah.
And probably the most popular homes go on this soon.
Right? I mean, again, it's a marketing strategy. So every agent, every realtor has their own marketing strategy of how they want to expose their seller's house. I give them the options when I meet with them. So, you know, and that's a great segue to what if you have a house to sell first before buying?
Right.
Yeah.
I mean, I really do feel like in this particular market that we're in, people that own homes currently, you know, they all have pretty low interest rates, mostly, right? Because of the environment they were in back in 2020. A lot of people refinanced into some incredibly low rates. So it's kind of hard for them to give that up in a way. But we do have some really neat tools here at Rate to be able to buy a house before you even sold your prior home. And if you do have a home with that low rate, there's even ways that people don't think about where they could rent out that home and buy another home without having to give up the rate per se. I mean, then you have to be a landlord, which comes with some responsibilities. But that is an option that people don't realize because they only, people think they need all the equity from the sale of their house to be able to buy the next house. Not necessarily. I mean, you only need to put 5% down on the next purchase because you're not a first-time home buyer. You can't put 3, but you only have to put 5. And
I mean, do you think this is a common fear? Like this is I mean, people that
I just heard it today on the phone. My rate's so low, I don't want to sell it.
Right. Yeah. So and they don't, they can't get past that mentality. So this solution that you have.
There's a couple solutions. That's one of them, to be able to show them how you can rent out the house and keep that rate, keep building the equity and buy another house to build equity. I mean, that's really how people build wealth in this nation, is through having multiple investment properties, really. Cash flowing positive. The renter is paying the mortgage payment plus more, right? So that's a great way to be able to do that. And you can buy a new house and only have to put 5% down. And there's also some ways to access, if you don't have the 5% down, people don't know that they can, if they have a 401k, they can borrow the money from themselves. They're their own bank when they have a 401k.
Oh, okay.
Not take it out of the 401k. I'm just saying borrow it. From the 401k. People don't realize, the interest rate that you pay on that, you're paying the interest to yourself. It's like a forced savings account. So, kind of who cares? Just like borrow the 5% and do it that way if you want. Now, if you have to move, and say there's a situation where you got to go to a better school district, and you don't want to be a landlord.
Yeah, I don't want to be a landlord.
Right, but
I mean, I do, but I don't.
We are. If you find a home that's desirable, that's in a good school district that a lot of people want, what are they going to run into possibly when they go to make their offer? I mean, you're going to see
multiple offers.
Okay.
I mean, anything, things that are priced well in a good location, in good condition, price, condition, and location. That's never changed, never will change.
Yeah.
That will be the driving force for any house to sell.
Exactly.
So there's a very good chance that you could run into multiple offer situation.
Yeah, that's true. I mean, we are seeing a little bit more inventory come on the market, but there's still not nearly enough for the demand of homes. So we're running into that. We ran into that all this year in multiple offer situations, and thankfully, we have this tool here at Rate that really gives you a huge competitive edge, especially if you have a house to sell. Because if you're in a multiple offer situation, normally a seller is not going to want to accept waiting to see your home is going to be sold, like waiting for you to list your home and sell
Right.
your home. They don't want a home sale. It's called a home sale contingency on the contract. The seller's going to say, no, I'm going to take this other offer that they don't have a home to sell. So you may think that you're stuck and you can't buy a house. That's not true, because here at Rate we have a program called Cash Ready, where we will actually make the offer on your behalf in that scenario. We will buy the house for you first, cash up front, and you can close in 2 weeks. So now a seller is looking at an offer from our purchasing partner, all cash with a proof of funds letter of $30 million. We can close in 2 weeks, no contingencies. What are they going to say when they're looking at these other offers that all have contingencies for a mortgage, contingencies for appraisal, contingencies maybe for a house to be sold, and then this one has no contingencies? We're not saying you can't, we're still going to let you do your 5-day attorney review. You're still going to do the home inspection to make sure that's the right home for you. You do have to be pre-underwritten with us, which can take a day or two to be pre-underwritten, fully approved. Because what happens after we buy the house, we're going to wait for you to list and sell your house. We're going to have a strategy. You're going to have a strategy with Victoria on how to do that quickly, because we don't want to be owning this house for you forever. We want you to buy it back as soon as possible, and then you'll buy the house back from when your house sells. With Victoria there, you'll then be ready that same day to buy the house back from us that we bought for you with the same mortgage and the same rate and the same interest rate as you would have got in the first place. But it was a way for you to win the bid and own a home that you would never have owned in the first place unless we had this type of program. It also helps people that don't have a house to sell just to make their offer more competitive.
Right.
I mean, we've done that recently.
Right.
In a house on Island Lake for a home that had multiple offers. Right. It was first-time home buyers, and they used our Cash Ready program as well. So there's a lot of different ways of using it. It's a very, very great tool to have in our back pocket and arsenal to be able to help you as buyers, win every time. Hopefully, win the bid.
Yeah.
And then you've also had experience with it because you had a listing.
Correct.
Where we used it on, right?
Yes.
You can tell how your seller felt when they saw that offer.
Yeah. So that it's just, it feels more secure, less risk for the seller to have to take on when it's not contingent on the financing portion, and that your third-party company is going to come in and purchase the home, and they have an agreement, and the buyer is fully approved all the way. There's not going to be any hitches necessarily going on. Mm-hmm. The buyer is going to be fully approved. So this isn't a like you said. Different underwriting.
Well, no, they just have to be fully underwritten in advance up front. So like a physical underwriter has to go through and review all the documentation that you sent in, or all the documentation that we have verified electronically, and just make sure it's everything is approved. And if that all looks good, then we're able to utilize this Cash Ready feature, this program for people to help them win the bid. So it's been super helpful in our business this whole year, to be honest. I mean, there's been a lot of people that own homes right now that wouldn't have owned those homes unless we used it, right? So very, very cool. Now, we kind of wanted to go through just a few real life examples of things that could be a hurdle, or maybe, give you some examples of maybe what not to do when you're buying a house.
Yeah, I mean, the what not to do, I think that's one of the top searches on Google or ChatGPT now is, what not to do when buying a house, or what to do when buying a house. Yeah. There can be a lot of fear or nervousness, especially for first-time home buyers in buying homes, and then some unknowns. Mm-hmm. So, unknowns that you just didn't know that you weren't supposed to do. Right. And, I cover these things during my buyer strategy session with my clients, so that we're not having this happen. Mm-hmm. But I think you just had a recent experience, didn't you?
Yeah, I did.
Not my client.
Not your client. But, and also when I send the pre-approval letters, I send a detailed PDF that shows do's and don'ts when you're pre-approved. But there's one example, and hopefully this won't happen to anyone here, but I just want to throw it out there. I mean, when you go through the underwriting process, you're going to get, there's steps, the appraisal, and then the loan approval, and then at the end, you'll be clear to close. So when people hear clear to close, they think they're all set and good, which they really are, as long as nothing changes with your financials. Yep. Because I just had a situation where a borrower was clear to close, and their closing was in like 10 or 15 days. And within those 10 or 15 days, something happened at their work. They got in a fight with their boss, and the wife it was a husband and wife, and the wife went home and was like, "Oh, I don't like my boss. I don't know what happened," but the husband's like, "Just quit." So she went back the next day. We're clear to close. Just quit your job. It's fine. We'll be fine. So she went back the next day and she quit her job. And what happens is, as lenders, we're required at least 5 days before closing. It could be one day before closing, but at some point in those 5 days, we have to verify that you're still employed, because we're using that income to qualify you, and we have to make sure that income is going to continue, right? So, it's 2 days before closing. We're doing our verification of employment. It comes back no longer employed. And we're like, what? No longer employed? This must be a mistake, right?
Right.
That's what we first thought. So we verify again with the employer. No, it's not a mistake. She quit. So then we call the wife and the husband, and they're like, oh, we were clear to close.
Yeah.
Right? So that's just obviously a huge life lesson for them, because unfortunately they weren't able to qualify without her income. So they had to regroup, and she had to go out and find another job, and then we were able to proceed after that. But yeah, she did try to go back to get her old job back. They said no. So it's just a real life scenario that.
But and what is the fallout now? I heard. I think the last number I heard was 22% of deals are falling out.
You mean like with home inspections and stuff?
No,
or
just general.
Mortgages?
Just
okay.
general.
So none of my deals fall out, by the way. Rarely. I mean, except for instances where you have something like that. So that's like the one-off things that happen. But,
right. And there's going to be those one-off things that do happen.
But there are a lot of people that are pre-approved that should not be pre-approved, or they're pre-approved for the wrong amount.
Yeah.
And you just had that one happen on one of your listings. Tell them what happened with that one.
Yeah. Unfortunately, with my one of my listings, the buyer, we kept trying to get our clear to close, and the buyer's gift funds fell through. The buyer's qualifications weren't exactly as tight as they should be, so that pre-approval letter was probably written a little shakily, I don't know if that's the right word, but just written on crumbled paper. I don't know. You tried to save it, and it just wasn't pretty. It really wasn't pretty.
It's just someone that shouldn't have been pre-approved up front. That's why it's so important to be working with the right experienced people.
A trusted
advisor. Look at our reviews. I just heard on a podcast today, sometimes people are weary when they see all the reviews are 5 stars. Unfortunately, all my reviews are 5 stars. I guess that sometimes turns people off in a way where they think, how is that possible? I'm just, I don't know how. I mean, I'm just good at what we do here. We're very, very customer centric. We're very much on your side with everything.
You're super thorough, super transparent.
Mm-hmm.
There's no shame in anything. And if it's not at the right time, here's how we're going to take the steps to get you there.
Exactly.
And then in due time, it happens, and we go through things. One of my colleagues just had a situation where a collection came up at the end of the transaction, and so they were no longer qualified to purchase the home because the collection didn't show up the first time.
Okay.
I'm just guessing because you run credit in the beginning and then at the end?
Well, not all lenders do that. Not all lenders do that.
Not all lenders do that?
Once we do your hard credit pull, and we'll do that once you have a house under contract, because like I said, we start with the soft. That's the credit we're going to use, and it's good for 4 months. So as long as you buy a house within 4 months and close within 4 months with us, we're not going to be rerunning your credit. Not true with every other lender. There might be other lenders out there that do another pull before the closing, which really, really can be bring up a lot of surprises. So thankfully, we don't do that here at Rate, at least.
That's probably detrimental as to what could have happened, right?
Yeah.
If you don't, which is wonderful. But then again, so let's ask this question, and help me if I'm going down a wrong path or a right path. But if you pull it at 4 months, and let's say I find my house at a month before that's to expire,
yes,
are you pulling it again then because I'm closing after the expiration of that?
Correct. It's if you close after 120 days, then I'm gonna have to re-pull the credit at some point. But before I do that, I call the clients and make
Right.
sure nothing's changed.
So like furniture shopping spree.
Yeah, exactly.
You know, while you're like looking for homes, you're packing your garage with some furniture or a TV.
And applying for new credit cards for that furniture. That's some things that you should call your loan officer first. It's not necessarily that you can't do it. Sometimes people can go out and buy a new car or buy new furniture. Sometimes in some scenarios. Some scenarios, you definitely can't. It just depends on the whole situation. So that's why you always keep us informed on what's going on, especially when it has to do with credit or anything that could affect any of your qualifications here. So, just stay in contact with your loan officer and your realtor and make sure they know these things.
That's
so you don't run into right. Exactly. You need
constant communication.
And then we're here for you even after you close. I just want to make sure people know that as well. We're lifetime partners for you when it comes to real estate, and we're going to sign you up for something called home reports after your closing. So each month you're going to get a very detailed and nice status report on where you're at with your equity and where you're at with home appreciation and where you're at with your mortgage. There's kind of all kinds of charts for you to see, so you know exactly where you stand with your real estate and your investment. And you're going to get that every month because the market changes month to month, right? Market can swing quick.
It can.
Yeah, appreciation is, I don't think, going to stop for quite some time just because it's all based on supply and demand. And, don't feel like you can't buy a house. There's just so many different options for you right now. So, and reach out to Victoria or me. If you're curious, just having a conversation. We're never too busy to just talk with you and just, everyone's journey is different, right? So we're here to help you start that journey from start to end and be lifetime partners for you to help you through your real estate ventures. So, yeah, that's about it.
So we're going to come up with some topics for the next one, right?
Yes, absolutely. So we'll see you next time.
If there's anything that you guys are looking for or have questions about, maybe drop in the comments a certain phrase of some sort.
We'll have all our contact information in our videos and whatnot. But yeah, if you want to drop in the comments.
Drop in the comments any questions that you want us to address for our next time we meet.
Absolutely. Sounds good.
All right.
Well, thank you, everyone, and we'll see you soon. And thank you, Victoria, for coming. Appreciate it.
All right.
Have a good one. We'll see you soon.
See you soon.